Turkey, previously regarded as a shining beacon among rising markets, is now in severe trouble. The country has been beset by soaring inflation, surging unemployment, and a plummeting lira, all of which have recently deteriorated. The main reason for the problem is a lethal combination of internal and foreign forces, including political insecurity, spiraling debt, and the crushing impacts of the COVID-19 outbreak. Turkey's economy is on the verge of collapsing, and the future appears gloomy unless immediate and decisive steps are made to get the country back on track. In recent years, Turkey's political situation has been unstable and unpredictable, with failed coup attempts and controversial referendums shaking investor confidence to its core. This volatility has caused the lira's value to fall, prompting significant alarm among investors. The Turkish government's choice to borrow heavily to fund public projects and social programs has only exacerbated the problem, bringing the country's debt-to-GDP ratio to historic heights. The COVID-19 pandemic has simply fueled the flames, causing a dramatic drop in consumer spending, a decline in tourism, and interruptions in world trade. With so many issues facing the country, it is evident that Turkey's future is anything from assured. Turkey's economy is in jeopardy, and if the country does not find a solution to its economic problem soon, it may face catastrophic collapse in the coming years. Hello and welcome to Economic News. Please like the video if you're enjoying it so far, and subscribe with all notifications turned on by ringing the bell icon so that you can stay up to date with our future uploads. Now, let us get back to breaking down the problems the Turkish government is facing with its economy. The current scenario is nothing short of catastrophic, with inflation at the heart of the country's economic difficulties over the previous 5 years. In fact, previous predictions for 2022 show an eye-watering inflation rate of about 70%, a staggering amount that is difficult to comprehend. To put that in context, the United States considers a 6.5% inflation rate to be worrying, but Turkey is dealing with a rate nearly 11 times higher. However, this is not the first time Turkey has confronted a crisis of this magnitude, since hyperinflation has been a persistent issue for decades. The Turkish lira was quickly losing value in the early 2000s, with a single US dollar equaling 1.3 million lira by 2001. Turkey was compelled to introduce a new currency in 2003 due to economic turmoil. The country is currently in a similar predicament, with currency depreciation making repayment of foreign loans more difficult and imports more expensive. Turkish enterprises who borrowed in dollars must still repay their loans in dollars, but the lira's depreciation has caused severe complications for Turkish banks. While a lower currency might increase exports, it also reduces government revenue. This is because export earnings are often in foreign currency, which is subsequently transformed into local currency. The quantity of income gained through exports reduces when the value of the local currency falls. Turkey must halt the vicious cycle before it is too late. Turkey's survival is in doubt as its leader, Recep Tayyip Erdogan, must choose between the country's economic stability and his own political ambitions. The government has spent billions of dollars to keep the lira afloat, but the situation remains severe. Analysts believe that hiking interest rates is the wisest course of action, but Erdogan is hesitant to take such a step, fearing that it will stifle the country's economy and jeopardize his re-election chances in 2023. As a result, Turkey is in a difficult situation, with no clear road ahead to attract foreign investment and support economic growth. While the globe recovers from the pandemic, Erdogan must demonstrate his people that he can keep the economy expanding even when circumstances are rough. But the cost of his political ambitions may be too high, and Turkey's future depends on whether he can stabilize the economy and address the underlying concerns. Erdogan's newest move, removing numerous officers from Turkey's central bank for rejecting his ideas, has aroused debate and prompted concerns about his genuine objectives. While some feel his method will succeed, others are concerned about the ramifications of his actions. Erdogan's strategy is straightforward: favor economic development above inflation. While inflation has always been a concern in Turkey, Erdogan believes that a faster growth rate will counteract the consequences of inflation and leave people better off financially. Several analysts think that this might be a realistic method for reviving the economy, but it is not without hazards. Many people are afraid that Erdogan's true aim is to maintain political power in the next presidential election, with the Turkish constitution forbidding him from running again. His actions have sparked concerns about how Turkey's political landscape would look in the next few years. The stakes are high as the country struggles with its economic crisis and political turmoil. Erdogan's actions may be the key to unlocking a route to peace and prosperity, or they may lead to even more turbulence and disaster. Only time will tell what Turkey's and its people's future holds. The COVID-19 outbreak has dealt Turkey a catastrophic economic blow, wreaking havoc on critical industries such as tourism and trade. Turkey, with its amazing cultural legacy and natural beauty, has long been a favorite of travelers from all over the world. Travel limitations imposed by the pandemic, however, have led governments to seal their borders and citizens to cancel their vacation plans. The end results? A dramatic drop in earnings for the tourist industry, putting numerous firms and people on the verge of bankruptcy. The pandemic has disrupted global supply lines, making Turkey's export of products and services increasingly difficult. This has inflicted a significant hit to the country's export-dependent industrial industry, forcing numerous enterprises to close or reduce their operations. The consequent revenue loss has exacerbated the economic turbulence caused by inflation and political insecurity, leading the country towards a disastrous collapse. The conflicts and political instability in surrounding countries have had far-reaching consequences, resulting in a tremendous influx of refugees and posing a serious danger to Turkey's stability. Turkey's efforts to strike a balance between its own interests and its engagement in these wars have been nothing short of perilous, resulting in enormous economic hardship. These are some of the reasons why Turkey was unable to accumulate sufficient reserves to safeguard its currency. Attempts to strengthen the currency via spending have had little to no effect, and the country is now on the verge of a tipping point where one incorrect move may have fatal implications. But not everything is as horrible as it appears. Turkey's economy is less fragile than that of other countries that rely significantly on natural resource exports. Turkey's economy is diverse, including industries such as manufacturing, construction, and services. The country is a net exporter of heavy manufactured items and has the world's 15th biggest economy in terms of GDP. Tourism is one of the country's greatest assets. Turkey is a popular tourist destination with several historical sites. The country has a rich cultural legacy, with its previous capital serving as the Ottoman Empire's capital for 600 years, the Byzantine Empire's capital before that, and the Roman Empire's capital before that. Turkey links the West with the East, and civilizations have repeatedly contended in this region, leaving an incredible quantity of historical landmarks. The latest earthquake in Turkey has inflicted a catastrophic blow to the country's already fragile economy. The earthquake damaged buildings, roads, and other infrastructure, which would most certainly require years and billions of dollars to rebuild. The calamity could not have come at a worse time, since the country is already reeling from a severe economic crisis aggravated by political instability, high levels of debt, and the impact of the COVID-19 pandemic. The tourist industry, which was particularly heavily damaged by the earthquake, is a critical source of revenue for the government. The catastrophe has placed a cloud of suspicion over Turkey's safety and stability, discouraging potential tourists and threatening the industry's survival. Furthermore, the earthquake has highlighted the pervasive issue of corruption, with many blaming it for the failure to follow safety precautions. which has exacerbated the devastation. With hyperinflation imminent, Turkey's authorities must take decisive and fast action to solve the situation before it worsens. Failing to act now might result in the Turkish lira collapsing and a disastrous domino effect on the rest of the economy. The situation is severe and time is running out. Thank you very much for watching this video. Leave a comment down below if solving the corruption in the government will better the economy of Turkey, or is there another way to solve this issue? Also, take some time to watch our other videos since they are as informative as this one when it comes to reporting on economies. Take care now and see you in the next video.